Let's spend another minute, Josh. I don't want to sort of gloss over your best stocks in the market list. With it, by the way, another CNBC Pro edition of late. Because what's interesting to me is the reason why we moved it up into our A block is, number one, financials have been trading so well, but that you make the declaration that it's the smaller banks that are actually breaking out. You like one chart especially, but can you give us a little bit more on that theme?
Yes, absolutely. As I mentioned, financials have been leading the best stocks in the market list by volume pretty much all year. But a lot of them have been, asset managers, broker dealers, insurance. Now we're starting to see actual banks, and not just JP Morgan, Citi, and Bank of America, which are on the list, and we've talked about them. But now I got big regionals. I got PNC, I got Truist, and I have Huntington Bank, which is the one I wrote up today. So the Journal had a story over the weekend talking about the fact that with mortgage rates down 9 out of the last 12 weeks, there are currently 2 million homeowners who could save money if they refinance. That's up from 1.7 million homeowners as of the end of July. So with every passing month, mortgage rates are ticking down slowly, but it's happening. If we get down to 6%, there would be 6 million people in the United States who it would make sense for to go refinance their mortgage. It would have to be 0.75 percentage points below where their mortgage was struck. That's like the magic number for when people say, hey, wait a minute, I'm paying too much interest on my mortgage. So that's a very powerful catalyst for the regional bank stocks, Judge. And mortgage refinance activity is only the tip of the iceberg. So the capital market stocks have already benefited from the bull market. And now if you start to get even 1 or 2 rate cuts, mortgage rates continue to come down, you're going to see this boom in demand for loans. You're going to see refinance activity. You're going to see existing home sales pick up. Huntington Bank, if you want to pull this chart up while I'm talking, this is a no-brainer to me. I'm not in the stock yet, but I may be at some point. I don't believe in triple tops. So what you can clearly see is this stock hitting its head against the same level. This is now the 3rd time it's trying this high 17s, low 18s resistance. I think she breaks through this time. A lot of these regionals have the same kind of inverse head and shoulders, which if you squint at what's on screen, you can see for yourself. And they're all in golden crosses, and many of them are making new highs, which HBAN recently did. If you pull that chart back longer, you can see there's a lot of room. So what we're saying here, traders can use 1550 to 16 as their risk management, as their line in the sand with a stop. I think longer-term investors just swim naked. Don't even bother. The 13 PE ratio, 3.5% yield. I think you've got that cushion. Your risk in the stock is recession, but guess what? That's your risk in every other stock. So this is an example of an area of the market we were talking about. I'm not suggesting people are selling NVIDIA and buying Huntington Bank. I'm just saying there are other parties going on, not just the one party. And that's what's notably changed in the market, I think, over the course of the summer.
Joe, you've been in that party. You've been at the regional bank party. At least you think it's going to continue.
I saw you there.
I do. Look, Josh and I look at markets in a very similar regard. We respect and understand price appreciation, the benefits of it, and how to invest towards it. I've said this over the last several months ad nauseum about the fact that the Joe T strategy in the early part of 2024 aggressively moved to an overweight of financials, despite a degree of skepticism on my part. And Josh is right. When he talks about early on, it was insurance companies, it was asset managers and brokers, and it's billed to be something more than that. It is regionals. And I have to tell you, I was surprised. We have a 35% weighting to the financial sector in the strategy. I was surprised at the last rebalance that we kept names like Citizens Financial Group, like Huntington Bank Corp, like Regions Financial, like PNC, like Fifth Third. All of these regionals stayed anchored within our sector holding. And I think it's indicative of a potential opportunity. There's underneath all of this, there's some catalyst. Whatever that catalyst you want to try and identify it to be, That's fine. Maybe it's regulation. Maybe it's what Josh is talking about with rates. Maybe it's pure valuation. But there is a catalyst.
You got real quick on that?
Here's my concern is that a lot of those stocks are up nicely. I agree, the financials of regional banks look good. But here's my concern. Last year, we cut 100 basis points, and it didn't touch mortgage rates. All the hope continues to be that we're going to cut interest rates again this year, short-term Fed funds rate, and that mortgage rates are going to come down. What if they don't? Like, does the regional bank thesis, does the large bank thesis still hold up in the same way if the longer end of the curve doesn't follow the short end? I don't think it does.